In today's video, we're going to discuss a potential solution that may help Canada's inflation rate from being significantly higher, especially relative to the US and the other G7 nations. Before we get into it, I'm going to share a quick clip, which is a promo video for our upcoming investment tour in the city of Welland on October 15th.
Hey guys, Koukun here. We are at a investment property in the city of Welland and we just completed our investment tour. So these investment tours, we take out some of our new clients to check out a few different projects that are either currently under renovation or complete, just to get an idea of the before and afters. We typically go through the numbers on a project like this, sort of purchase price, after repair value, go into the rental numbers if it's already been rented. So if you're interested, click the link below.
All right, so the link is in the comments below if you want to sign up for our next Welland investment tour, and it is a free tour. So let's get into this video. The reason I came up with this topic for today is a investor that I follow closely, Bill Ackman of Pershing Square Capital Management. He's someone that I've sort of followed over the last many years, just curiously to see what he's up to, what he's saying. He's very vocal about the investments he takes place in. One of the things he's recently brought up is a tool to fight inflation may be immigration. His point being that in order to reduce inflation, what they're currently doing is increasing interest rates, which destroys demand. But the other way to reduce inflation is by increasing supply, and specifically wage inflation, which is the rising cost of wages, can be reduced by new workers. So if you have immigration, you have more people who want jobs, and that takes away jobs from or supply from the currently very tight labor market, which may be a tool to reduce inflation. So inflation can be mitigated by reducing demand and or increasing supply, exactly what I mentioned. And he's saying, doesn't it make sense to moderate wage inflation by increasing immigration than by raising rates, destroying demand, putting people out of work, and causing a recession? How realistic this is for the US, who knows? And before we get into some more specifics, why should we listen to Bill Ackman? So Bill Ackman has a track record of what he calls defensive hedging within his hedge fund. So he's one of the few hedge funds that actually hedges his portfolio. Everyone talks about it, but few have a track record of having done it. So for example, in the 2008 financial crisis, he hedged against the housing market collapse. He had an investment of 64 million in CDSs, which resulted in a benefit to his firm of 1.2 billion and 18.5 times return. He then in COVID did the same thing. He predicted that COVID was going to cause a very significant impact on the economy. The economy would need to be shut down and the stock market would suffer. His investment there was very early. It only cost him 27 million and he returned 2.6 billion, almost 100 times return. And then more recently, in late 2020, he predicted interest rates would have to rise due to inflation, and he purchased what are called swaptions. It's an interest rate swap, complicated financial product, but essentially it allows you to make money if interest rates go up. He invested 188 million, and so far he's made 1.4 billion, and he's since purchased more swaptions, hedging against future rate hikes. So he's already up 7.4% as of, this was in 2022, early 2022. So it may even be up higher since the more recent rate hikes. So that being said, again, Bill Ackman is someone who has a track record of making some of these bets. He's not always correct. I should say that there are some investments he has made where he was off, but specifically in this type of prediction with interest rates, COVID, the subprime crisis, he has had a good track record. If this is correct, here's the curious part. If you look at the average hourly wage data in Canada, it has been sitting for the last couple of years around 3%. During COVID, it did spike up to 10% right at the beginning, but that, again, this is average hourly wage. It may be a result of more lower wage workers being forced not to work due to the restrictions, and maybe more higher wage workers like tech workers who could work from home, or healthcare workers who could continue to work, continuing to work. That may have been the reason why this number was higher. I don't know exactly. In summer of 2021, it dramatically reduced, and then now it's been on a gradual upward trend up to the current 5.4% or 5.58 in September, as per this chart. Now, the US has had an almost identical path. They were hovering around 3%. They spiked up to 8%. They also had that drop in early 2021. But here's where it gets interesting. They had a recovery much faster, and they've been steadily staying around 5%, versus for us, it's only recently got to 5%. What this means, again, it's not completely clear. But when we look at the Canadian immigration forecast, so right now, Canada aims to welcome 430,000 new permanent residents in 2022, 447,000 in 2023, 451,000 in 2024. So in the next 3 years, we are going to be just shy of 1.5 million people and these are new permanent residents. From what I could see, this number does not include students coming to study in Canada, which there is a significant amount of students who come study in Canada, and then afterwards apply for a work permit or a permanent residence after the fact. So that is going to be a huge number of people who become permanent residents in the future that we already know they're going to be permanent residents because they're coming here, taking 4 years to study, getting a diploma here, paying very high school rates. But that being said, again, more demand in terms of people coming here who are going to work in Canada. If you look at the population growth change over the last few years, you can see the green line is America and blue is Canada. So they've been somewhat steadily consistent. Occasionally the States is higher, occasionally Canada's higher. But more recently, we're starting to see a bit of a divergence where the immigration rate in America is reducing. As of most recently in 2020, may have been due to the pandemic, it went down to 0.4, but even before then it was 0.7, 0.6, 0.5, right? And the Canadian immigration number is rising, and it went as high as 1.4. So at one point, we were almost 3 times the immigration rate of the States as a percentage of our population. We're a much smaller country, so it is easy to have a large population number relative to a country like the United States. If you look in the G20, Canada's population growth is the fastest in the G7, and it ranks the 7th in the G20. So of the other nations, if you consider really developed nations, Australia is probably the only other nation with as strong of a population growth as Canada. I guess Saudi Arabia is there too. But in terms of, I guess, more Western developed nations. And the curious part, this is from 2016 to 2021. Canada's overall immigration was 5.2%. America's in the same time period was 2.6%, so half of Canada's immigration rate. So what does all of this mean? If Bill Ackman is correct in saying that immigration can solve inflation by reducing demand for workers, or increasing supply of workers, which reduces demand on wage inflation, we may be given a silver lining to all of this because of our immigration. We've so far looked at immigration as a reason why our housing market is going to continue to be strong because of the demand for people to live here. But we may start to even see benefits both in our economy that we've already seen up to this point, but also in the reduction of inflation over time. So it will be interesting to see if inflation persists. Is there going to be a diversion in the inflation rate of Canada relative to the States? And then potentially, is Canada going to be able to reduce interest rates sooner than the US? Now, obviously, that is all very uncertain. Predicting the future is impossible. So all of this to say, I'm going to be watching this closely to see is our immigration going to affect the wage growth in Canada relative to the States? And as a result, are we going to see less inflation over time? So hope you found this helpful. Until next time, all the best.